Well, g'day there traders and friends, market participants and enthusiasts right around the world. This video will be released pre-market Wednesday. This video is going to be speaking about or referencing that of the US dollar and the significance it's going to have on the price of commodities as we round out the year 2017 and also transition into the year 2018. At the moment, I cannot stress the importance as to what is happening on the chart of the US dollar. If you pay attention to the top left-hand corner of my screen, you can see the ticker symbol $DX. This is the US dollar index. Now, as you can see, it's trading at 93.5. The reason why I am speaking, or at least referencing that of, I guess, the purchasing power of the US dollar is because it sits at a very precarious type of location on the chart itself. This is now the weekly chart of the US dollar index. This is dating back to the year 2015, and if you just pay attention from really 2015 through 2016 to the end of 2017, I want you to just more or less focus on this sort of red rectangular sort of area that I'm drawing on my screen at the moment. We were largely in that of some form of a long-term consolidation. This lasted for pretty much 2 entire years worth of trading. All right, so a very long time. Now, as we move towards the beginning of 2017, or really late 2016, we finally broke out above this 100 area that had been acting as resistance dating back to early 2015. Everyone was very bullish on the US dollar. However, it really sort of stagnated and reversed early in 2017. And for really the most of 2017, it has been a very bearish year for that of the US dollar. As you can see, its purchasing power has moved from 103.50 all the way down to the current levels of 93.50, but as low as about 91.20. So a massive sort of depreciation in that of the purchasing power of the US dollar. Now, obviously, if you think about this in connection, all right, or correlation with that of the of gold and silver, the relationship itself is generally inverse. So as the US dollar strengthens, commodities, of course, lose value. And as the US dollar loses value or loses purchasing power, that of commodities tends to rise. It's not a perfect relationship. It's not correlated one-to-one. There are times, of course, in this relationship where they are more closely correlated than others. But at the moment, they have been working relatively well in terms of the inverse relationship. Now, what makes this very important at the moment is that, to my surprise, only a number of months ago, really 2 months ago, we broke below this 92.50 area. And the reason this was very important to me was because this has been a macro support, again, dating back to 2015. You can see all of the times that we've come very close to this level. This is on the weekly chart, just to remind you. So it's even more delicate on that of a lesser fractal or a more minor fractal when we start talking or considering that of the daily movements. But you can see over here, this has been holding as support for at least 2.5, almost 3 years at the moment. Now, as we overshot the macro support area, a lot of people were becoming very, very bearish on that of the US dollar. If we fast forward, however, since about the mid-range or the midpoint of September, the US dollar has strengthened. Now, if I can very quickly, just to show you this inverse relationship, if I bring up that of gold, for instance, I mean, I hope this works. There we go. You can see that as, of course, the US dollar, which is the candlestick chart on my screen, has been losing value, that of gold has been appreciating in value. We get to the bottom. Let me just bring sort of a vertical line, so to speak. I'm just drawing this with my pen drawing tool at the moment. When the US dollar then strengthens, okay, gold and silver lose value. So this is the inverse relationship that I'm talking about at the beginning of the video. Now, what makes this very important is that if I take off gold and just go back into the US dollar, there is one of two things which is happening right now that I don't have the answer to, but I can tell you definitively that one of these two scenarios is going to play out. And again, it's very important because if you can understand this, you can position yourself in commodities, in gold and silver, if you can remain bidirectional, if you can remain neutral as to the direction of these commodities, and you can set yourself up into legging into some long-term call or either put contracts depending on the direction in which the US dollar breaks. Because essentially what is happening right now is that we are retesting this macro support area as potentially new resistance. Generally, when you break such an important area of support, you will get the back test. It happens in a 1, 2, 3 pattern. So you break, you put in the new lower low, you come back up, you retest the pivot, i.e. the pivot point, and then you get the follow through, which eventually takes out that first swing low, or the most recent and major swing low, which is the confirmation of the trend continuing. In this case, it would be that of the US dollar moving back down to lower areas. Now, if this is to play out, gold and silver are to turn up and they will move to higher levels. Now, on the contra, okay, so differentiating between the bearish aspect, the potential of the US dollar more or less rolling from this little turquoise box on my screen right now, I want you to sort of disconnect yourself emotionally and just think about what it is I have to say right now. This is the other sort of argument, the other sort of aspect, or the counter aspect, or the counter argument, pardon me, to that of a bearish sort of outlook for the US dollar. As the US dollar broke that macro support, again, the macro support, this is on the daily time frame now, I'm just drawing it on my screen, this sort of horizontal line here, as we continue to price in that most recent lower low, i.e. the continuation of that bearish move which we've been in for most of 2017, what we really began to do was establish some very strong positive divergence, so what we call bullish divergence. So as price was continuing to print in or to price in that lower low, the MACD, which is most important in terms of reversals, when we see reversals at lows and also highs, was really starting to become defined. As you can see, if you pay attention to the low on the MACD reading in August, and then you pay attention to the subsequent high low in the month of September, you can see that momentum itself is really losing its velocity as price continued to push down into these extreme lows. And as such, and if we continue with this discussion, not only are we starting to see again some very pronounced bullish divergence, which is very bullish for that of the US dollar, we're also potentially setting up that of an inverse head and shoulders. So you can see on my screen over here, you've got the left shoulder, you have the head, which is coming down here at about 91.30. And then we have right now under construction in the month of October is potentially the right shoulder of that inverse head and shoulders pattern. Again, when you see these terminal chart patterns, okay, when you start recognizing that of inverse head and shoulders, or if you start recognizing that of normal head and shoulders at the end of a bull market advance, or if you start talking about, you know, a little sort of slight variance in chart pattern, you know, distinguishment when you're talking about, say, for instance, triple tops, triple bottoms, I mean double tops, double bottoms, generally what will also show up is that of divergence. And that is exactly what we are seeing on that of the US dollar. So as we sit at the moment, we're trading at 93.5 on the US dollar index. We are potentially at that right shoulder construction, but at the same time, if I go back to the weekly chart, we could still be back testing this macro support, which we just blew through. We didn't even really stabilize or stop, you know, a couple of months ago. And we could be getting, or at least setting up, the potential rollover. So the US dollar at this moment is rather delicate. It's delicate in essence because we cannot definitively say, look, which direction it's going to move, but I can point out how it's going to play out on both of these directional plays. Either we are going to take out roughly, I mean, I'm going to move this trigger down just so you can see this. The bearish entry essentially is down here at 92.44. If we crack below this swing low, this head and shoulders pattern more or less goes out the window, and it looks as though if we take this swing low out, we'll be coming down to 91.31, but more likely we'll be overshooting this, and the trend will continue all the way down to that 88 level, which will be another quite considerable depreciation in that of the purchasing power of the US dollar. That is going to spike commodities. Gold, silver, oil, all of those commodities are going to rise in value. However, if we do not break down below 92.44, and if we get a breakout above this shooting star candlestick set up on the 6th of October. So it was earlier in the month of October, but it is very, very important for us as technical swing traders because we have a multiple sort of area of resistance which is continuing to form at about this 94.20 area. So generally what happens is if we get the inverse head and shoulders, we will break out above the swing high over here, and then we will get the back test of this pivot, and then that will be the driver, or I guess the impetus, the back test of this resistance area as new support to drive the price, or at least to reverse that of the sort of intermediate trend that we've been in for the US dollar for the majority of 2017, to actually reverse it and then to start clawing our way back up to these higher areas of resistance. If I start zooming out and bringing down these areas of resistance, we've got one at 96. The next person which I'm paying attention to, if this pattern breaks to the upside, is all the way back up here at 100 on the US dollar index. So I just wanted to make that very clear. At the moment, it's best to sort of sit on your hands. It's best to really do nothing and just monitor this day to day. I mean, you don't have to look at it during the trading session. The US dollar index, it moves relatively slowly for the majority of the time. It's not until we get into free space or clear air or fresh breath, so to speak, or fresh air, where we can really start to see some very strong advances or even very strong declines. But at the moment, we're sort of in no man's land. but it sets the stage, of course, for potential trading opportunity also on the US dollar index if you wanted to trade UUP. But also, what I'm more interested in is the potential trade opportunity which is forming right now on gold, but also silver So these are two trades right now, gold and silver, which, although we don't have, I guess, a vested interest in at the moment, they are certainly going to be opportunistic trades, maybe towards the end of October, but probably definitively in that of November if it doesn't come before the end of the month of October. So it's something to think about. It's something to ponder. I mean, don't spend all that much time thinking about it. I've more or less laid out the roadmap for you. It's just a matter of waiting to see, well, which direction is it going to be? Is it going to be the breakdown below 92.44, which sort of throws, again, this inverse head and shoulders discussion out the window? And again, it will look as if the bigger macro trend, so to speak, for 2017, or the intermediate trend of 2017 is set to continue, or whether or not these positive divergences, these bullish divergences with these subsequent lower lows in price, but the higher lows with that moving average convergence divergence reading is going to play out, and whether or not we actually start breaking out above 94.51, and also more importantly, this shooting star candlestick over here. And the high of this candlestick, if you pay attention to this figure in the top left-hand corner of my screen, is sitting in at about 94.27. So I just wanted to, to share that with you. I hope you found that somewhat valuable, and it's going to be a relatively important sort of learning exercise for us right now to follow along with the US dollar, and then, of course, for you to also gauge the subsequent sort of movements or reactions in that of gold and silver. And then, again, you shouldn't be all that mystified as to why gold and silver are choosing the direction which they are when you start linking it back and looking at the intermarket relationship with that of the US dollar. And again, commodities priced in US dollars, the price of that US dollar, whether it's appreciating or depreciating, has a massive significance, obviously, on the market value, the traded value of those commodities moving forward. And I just wanted to share that piece of analysis with you. So if you have any questions, please email me, success@pivotpoint-trading.com. Until next time, everyone, enjoy your Wednesday. And I'll be back with you in due course for some more market analysis. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.